Hello, this is Graham Bibby here on the 11th of March 2014. And I thought there was some interesting market action last night, so I thought I'd give you a quick video Camtasia, especially before I set off on my 4-week journey around the Asia Pacific, which is to do with talks I'm doing and also about my books, Master Your Mind, Master Your Money. Anyway, let's get on to the markets, and the US market is the one that currently has been leading the direction of the other markets, so that's where I like to focus. And my undervalued portfolio strategy, where I pick undervalued stocks with superior earnings growth, is still looking very, very good. I have some great stocks in there. I was a bit concerned that the market seemed to be stalling, but I just want to show you something interesting here. This is the Nasdaq, and I just want to zoom in a bit, because once you break above these highs, see where my arrow is here in this circle on the right, blue circle. Once you break above these highs, that is normally a sign that the market is moving significantly higher, especially after you've had this kind of correction. This was breaking down. It was very, very negative. You'll recall from one of my Camtasias saying that before. And then this day was a key day reversal. And by that, if we want to get into some technicals, you see this line on the right, that's where the market ended. So at some stage, the market was all the way down here, and then before the close, the market recovered to that point. Now, the day before, it was at that point. You see that line? I could try to make it even better for you. See this line here? This line is lower. That's where it closed on that day. That's where it closed the day before. So it was down. But you see, there's underlying currents in the market. This is why you work on closing prices, because we'd gone all the way down here, then buying came in, and although we were down, the market was reversing. And then, hey presto, the next day we had a spread like this, but we ended towards the high. Then bing, bing, bing. We're hitting new highs. We're ending on the high every day, and we've gone basically from springing below the last support level to above the next support level and above the next support level, and we went all the way up. We broke through past this top here, boom, and then past resistance can become future support. So we fell to the support level, virtually touched it, and then boom, up. This day was a down day, but up, down day, up, up, down day, down day, looking a bit negative, then boom, up, up, down, down. And then this day, again, you notice we went lower, but we've ended virtually the same as the day before, well, 0.04% down. So you can say, oh, the market's down again. But the interesting thing is, it's come off that low. The low was 4307, and it's ended at 4334. So that should mean, could mean, and normally does mean, that that is another bottom in place here. And if we're up tonight, that means this is the support level. 4.3 looking like a good support level, and the moving average is moving up. So I know there's a lot of pundits out there saying doom and gloom, the end of the world's coming. One famous guy that I have a lot of respect for is currently going through Australia, scaring the pants off everyone. For me, I'm not that smart to make predictions. I let the market tell me, and I follow the trend. Now let's just go S&P 500, blah, 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 blah. Da, 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 da. Here we go. We've broken through these highs. And here we are. We've ended. Wow. Look at this. Yesterday, we ended 0.05% off of the high for the day. Almost the same as the day before. Again, it could be a key day reversal. And the transport index. Now, why is the transport index important? Because transport index transports things around in general. So that market is, again, it's just breaking out to new highs now. In the internet age, believe it or not, more things traveling around than ever before. So transport index looking up is looking good. Again, in January, along with a lot of markets, it was looking negative. Now, after a negative period, and I've just tried to get my insider club people and other people to open accounts to add more money. After a sell-off in the market, and then we get a new uptrend, that means all the weak players are out of the market. So this is the best risk adjusted period to invest in the markets. Now let's have a look at the Dow Jones Industrials 30. Okay, we're getting towards the previous top. We broke above this resistance level because this is support here, so it could have been resistance here. We went above it. We still have that key day reversal, looking quite good. The great thing would be if we break above that high over here. And then let's go even to the smaller companies. And again, you know, we've broken above this high. It's been virtually one-way action. There was a bit of a correction here, not much. That could have been a support level. And this here now is looking like a healthy little correction. And again, let's have a look. You can see down a bit, down a bit, down a bit, down a bit, and bit of a sell-off, and pop. We are buying during the day, and this moving average is moving up. The closer this average moves up to this level, the more likely this is to turn up. So this is Graham Bibby here, saying I was a bit concerned because a few stocks were not behaving themselves. I was a bit disappointed at the biotech sector because that's been doing great, but you would expect a bit of a sell-off. I'm watching some of my prima donnas there that still are undervalued with very good strong earnings growth, but there may be more profit taking. So I'm watching those quite closely because, you know, I don't get emotional with stocks. This is a strategy and a methodology, which is why I diversify the funds across a number of stocks depending on how much money you've got. Ideally, if you've got a large enough amount of money, you should have 20 or more stocks. If you've got a smaller amount of money, you may only have 8 to 10 stocks or 12 stocks. But overall, I'm pleased with the market. It's been a difficult period. It's been difficult really since last October, November, with the Syria problems and then the debt crisis in the US. And recently, you know, we've got the Croatia thing, Ukrainian thing going on. But I'm still confident that with my focused approach, I'm looking to knock the lights out this year. So have a great week ahead. And I will come back to you. I will be watching everything every day, even though I'm traveling. So you can be rest assured that your manager is on top of your portfolio every day. This is Graham Bibby signing off, and have an amazing week.